Hello everyone and welcome to our channel. Today's topic is buying property in Germany. Since it might cost a lot of money, we're going to talk about buying property with mortgage. We're going to give you some examples. We're going to show you calculators to understand is it better to rent or it's to buy, and if you're ready to buy, what can you afford with your money using, of course, leverage. And I invited Nick, who is CEO of a couple very useful sites. But today we're going to go specifically about Hypofriend. Nick, tell us a few words about Hypofriend and what you do there.
Sure. Yeah, nice to finally meet you. Um, where do I start? So Hypofriend is a classic online mortgage broker. We started 8 years ago. I am from the Netherlands, so I was an expat myself, looking to buy a home in Germany. I was used to, digital services, much like many Ukrainians are used to, and then I was quite surprised by how old school everything was in Germany. A local broker came to my office with his briefcase, put the loan contracts on the table, and tried to explain everything to me, which didn't make a lot of sense. And then later on, I realized, okay, there is a lot of potential for innovation. So that's how Hypofriend was born. We basically built it out of a need to digitize and to bring transparency and efficiency into the market. So fast forward 8 years later, we're now 75 people based in Berlin. Our team has about 40 mortgage advisors who are helping customers understand whether renting or buying makes sense, whether how much they can afford, what kind of mortgage is the right mortgage for them, should they repay quickly, repay slowly. And then we also have two other companies as part of the holistic financial journey. So we look at not just how do you get the cheapest interest rate, but how do you actually plan for the future? Do you take a small loan, a big loan? Do you put all of your equity into it, or do you, save some equity for ETFs or private pension or for an investment property? So how do we optimize the entire picture, so to say? So that's what we do with Hypofriend.
Yeah, I must admit you're doing a great job because I've checked your sites and you have a lot of useful content in English, which of course for me being outside the German
Yeah.
is the only language I can understand. And yeah, I did heard the reviews that Germany is very bureaucratic in some points, so
Yeah.
the making it digital, it's a great way to go. All right. So for our viewers, please like this video if you're watching us. We do gonna accept questions later. And now, Nick, first question. It's not a philosophical; it's fully rational question. Should they buy, earn, or rent in the current environment? Maybe we can take an example. You do have calculators at the website, and we can show our viewers.
Of course, let's do a little live example because I think that's always the most fun. So we do have a simple calculator on our website called it's a rent or buy in Germany. And without getting too philosophical about it, it's a pretty straightforward question, which a lot of people start out with: does renting or does buying make more sense? What I would like to start with is the general framing for how we look at this question. So it's a question of how much do you have to invest and how long will you end up living there in order to recoup the investment costs. So in Germany, especially, you have high upfront costs. So that's why this graph is red at the beginning. To give you an example, if you are to buy a property of, let's say, 400,000 in Germany, you have upfront costs in Berlin of about 8%. And this is without a real estate agent. So that 8% of 400,000 is 32,000. So that 32,000 is what you would invest in the first year. So you lose that automatically. So whether that makes sense to do or not depends on two key factors. The first is, what is your current cold rent? Why? Well, because if you have a very good a long-term rental contract, then buying sometimes doesn't make sense, right? Because you have these high upfront costs, and then at the same time, if you have low fixed costs, then why would you buy? Then it makes more sense to invest in something else, either an investment property or just the stock market via ETFs. So that's the premise for the first comparison. The second is how long do you plan to own it? Now, why that is quite important, because in Germany you have 2 or 3 important considerations around the 10-year rule. So the first is, normally in Germany, when you get a mortgage, you fix the interest rate for 5, 10, or 15 years. What that means is your mortgage contract, so the amount that you pay back to the bank, is the same every month for either 5, 10, or 15 years, so that it doesn't change. In some countries, like Switzerland or the Netherlands, you have more variable interest rates, so it changes every month. So if the ECB increases it, then your mortgage rates increase. In Germany, that's not the case. You have longer fixed periods, so you fix it for typically the average is between 10 and 15 years. So the good news is that you know how much you're going to pay. The bad news is that it's a very long period of time and you can't easily cancel it. So if you are going to cancel your 10-year mortgage, you have to pay a penalty, a prepayment penalty it's called. So that's why it's so important to think about how long do you plan to stay in Germany. So when we take this example of buying a property in Berlin for 400,000 or renting a similar property, in this case I would say it's probably more like this, and then the cold rent, if it's indexed, increases every single year. That's something we have to consider. And then how long do you plan to own it, and what is the property value increase? So when we fill that in, we see that in the year 0 we invest the 32,000, and then after 2 years it already breaks even. So break even implies that the value increase in the property and the saved rent makes up for the upfront costs. So in this case, you only have 2 years to wait in order for it to make sense, and that's already very interesting. So that's kind of the impact of a high rent. Now, if you're in this example and you have a great rental contract for 800 euros, then obviously you see, wow, okay, all of a sudden it takes almost 7 years for it to break even. And then if you were to say that it's fixed at 0%, then it's going to take even longer to break even. So it takes 8 years to break even. And the question is, okay, does that really make sense, or does it make more sense to invest in something else? A lot of people have their savings in a bank, and that's something that you can also play around with. So does it make more sense to buy and then live there, or rent and invest? And that's something you can play with in this calculator to give you a bit of a comparison to what makes sense. So overall, it boils down to how long do you plan to stay in Germany, how much do you want to invest up front, and then the third is, what is your current rental contract? Do you have a great contract, or do you have let's say a new contract and it's short term and you're paying 25 euros per square meter?
Well, thank you. I would like to follow up on this calculator. I see you have maintenance cost, repairs, etc. at 70.5%.
Yep.
What about property taxes? Are they insignificant to calculate there, or are they big enough and we need to account for them in this 0.75?
It's a very good question. So in Germany, the majority of the tax is paid upfront. So you pay the so-called property transfer tax, which is 6%. It depends on which region you're in. In Berlin, it's 6%. So that's how I calculate with the 8%. So you have 6% property transfer tax and 2% notary. So that's how you get to the 8%. You do have ongoing costs in here. It is rather small. So it's about 0.1%. So we typically buffer it into this. but it's quite insignificant compared to everything that you pay up front. That's why in Germany so few people buy, because it takes a lot of equity and savings to invest. But then once you have it, it pays off.
Sounds good. And can we say that if somebody is very smart investor and let's say he's gonna earn 8% annually on its stock, the picture significantly changes?
Yeah. So in this case, you're better off investing. So that's with this example. You have a great rental contract, and you are a good investor. So let's look at it slightly differently. So in this case, if you are a good investor, you invest your additional savings into the stock market, but you still have a high rental contract. Typically, this is more like inflation, 3%. I do want to say that in Germany, even if you do have a good rental contract, it doesn't guarantee that you can live there forever. There are loopholes that landlords use to cancel contracts. So one of the problems is that if you have a rental contract that is too good, the landlord's incentive to cancel that contract only grows. And there is simply no protection against that. So the German tenancy laws are very strong. You can't just cancel a tenant like this one day to the next. What that implies, though, is that there are legal ways of doing it. And that's, for example, claiming what they call Eigenbedarf, so own use. So if I have a rented apartment that I as a landlord rent out, it is possible for me to cancel it and claim it back if I say it's for my own use. And that's important to know. So if you say, hey, I have this great rental contract, I'm going to live here for the next 8 years, it's not guaranteed. A private landlord can claim it back for own use if he has good reason.
Yeah, well, at least Germany is a country where there are legal ways, because in Ukraine, the people can send some tough guys to talk to the tenants, and it's totally different. But it's much less regulated market, of course. All right, so let's say the calculator shows, it's better to buy, and following this example, the property is gonna cost 400,000. Would you say that 40,000 is enough for the down payment? And what else important to know to kind of do the next step besides going to Hypofriend and filling in the application?
Yeah, it's a very good question. So I would say the next step is always what can you afford? So a lot of people, once they see, hey, okay, buying a 400 or 450K property makes sense given my current rent. The next step is, what can I afford? And what you can afford is a question of two things. It's how much income do you have and how much savings do you have? I do want to say that it does matter whether you are a permanent resident or whether you're a blue card holder. The reason behind that is that there's a term called loan to value. Now, the loan to value represents how much of the property do you want to borrow. So a mortgage is great because you basically borrow against something. And that's why the interest rates are much lower than, for example, if you just get a credit loan. A credit loan, you're not borrowing against anything. So it's not secured or collateralized. What that means is that the interest rate is lower. And so the question is, how much of the value do you borrow? So if a property costs 100,000 and you borrow 90,000, you have a so-called loan to value of 90%. Why does that matter in this case? Well, the point is, if you are a blue card holder or temporary resident, you typically get capped on how much you can borrow. So you can't borrow the full amount on the property. You can only borrow 90%. So that's why whether you're a permanent resident or whether you're a blue card holder or temporary resident has an impact on your affordability, because you will need more savings. And those parameters are all things that we have built into our calculators. And that's something you can play with. So if we take a classic blue card holder or with another blue card holder, you will see that you will be capped at 90%. So in this case, the affordability drops. So you will need much higher income, but also savings. So if we increase the income to 1,500, which is about 50% here of the monthly net income, and sorry, that's my dog. And we increase the savings as well, you'll see that we increase the affordability. So typically for a 450,000 property for blue card holders, you will need the fees of the 8% plus an additional 10% for this 90%. So we call it a 90% LTV implies almost 18% down payment. So in this case, it's almost 100,000. Yeah, if that's clear, and we need to.
Yeah, we still need to increase the income. Savings.
Yeah, exactly. Exactly. And once we do that, then we have the right amount. So here you see an example where it's quite tricky to save up to 100,000 euros, and that's given the current interest rates, right? So we see that here. In this case, we have an example where we don't even have a real estate commission. If we even have the example with real estate commission, so where it changes to 3.5%, it means that another 16,000 is required. So of course, the actual affordability decreases again. So this tool basically helps you quickly understand what you can afford. And here you see the overall loan interest for this given constellation. So interest rates are now around 4%. They have been around 3.5% last year. Unfortunately, all the commotion in the world with Trump and Greenland and everything else, what seems to be happening, the interest rates have been climbing more and more.
Well, it's still, 4% is not too bad compared to some other economies. And let's say we have the viewer who is interested and who's passing this step number 2. So it makes sense to buy.
Yep.
He or she has enough savings, and the whole math makes sense in terms of monthly payment.
Yep.
Usually when they want to buy, I assume they have some property in mind, or at least they know some real estate websites. And let's say they already found the property with real estate agent or not.
Yep.
What would they do at the Hypofriend? I guess the next step is to get some consultancy, and maybe you can tell more about the value of this consultancy, because I've read that Hypofriend is doing a lot of work gathering all the bank offerings. But why not just click on the bank offering from the website? I would work with mortgage consultant too.
Yeah, that's a very good question. So it is quite complicated. Unlike other countries, you have a complex setup. You have over 1,000 different banks in Germany. So you have Sparkasse, but every Sparkasse is different. And so that also means that the regulations between each bank are also slightly different. And what we've done is we've actually aggregated all of those conditions. And why is that important? Well, you basically can come to us as a broker, and our platform finds the best mortgage conditions based on everything you tell us. And I will pull out a little example to see.
Yeah, I've seen on the website, it even asks if you are blue card holder or temporary resident. It's great that you can account for all these details. It's all online.
Exactly. So let me give you an example. I'll again share my screen. So here you see how our platform works. I take a fake example. Here you have me with some fake data. You see all the information we have to fill in. You then have the property information, for example, and then you have all the loan criteria. So this is a tool that our consultants are using. And what it does is it basically allows us to then search across all the platforms and see what bank is offering the best interest rate. And we have multiple platforms in the background. So we have like a multi-search platform. So not just a single search, but a multi-platform search. That way we can guarantee that our clients have the best offers. And this is at the end of the day what saves our clients a lot of time and a lot of money.
And can you tell a little bit more about your business model? I assume you get some kind of bonus from the bank if you brought them the customer, right?
Exactly. So we are, as a classic broker, the platforms, they have a kind of preset fee. It's about 1%, and it's always paid by the bank. So it's never paid by the customer. So whether we bring a client to Hypofriend or ING, we will get about 1%. So what we try to do is we try to optimize the customer outcome. That's one big difference between Hypofriend and classic brokers, is that we don't pay our mortgage advisors based on commission. They're all employed, and they don't really have an incentive to charge commission. Their incentive is actually on customer experience and outcomes. And that's one of the big advantages of working with us, is that we have all the banks. Our advisors are incentivized to deliver the best outcomes, and we then go out into the market. We talk to the banks via the APIs. We then basically submit the application, and then inside the application, there's a list of all the documents required. So let me give you an example. You basically see all the different documents that are required, and we take care of preparing everything, because it's really a huge amount of work to get all the documents ready for the bank in the right way. So there, let me give you the list. So here you see the list. So you have your proof of equity, your payslip, registration card, then the property documents. You need Flurkarte, building description, purchase contract, floor plan, Teilungserklärung, floor area calculation, the Grundbuchauszug. And so we prepare everything, and then basically it's uploaded into our portal. The advisor goes through it, makes sure all the documents are checked properly, that it's the right documents. We do offer an additional service where we actually do like a due diligence. So we make sure there's nothing crazy or some kind of legal loophole. There are, because it's such a big transaction, there are lots of potential pitfalls in the property. So if you're buying a new build, for example, what happens when it's delayed? So we check that there's a compensation clause, that in the case of a delay or bankruptcy, that you are protected. That's one. If you're buying an existing build, we have other things that we need to look at. So for example, how is the ownership structure inside the house? What happens when the roof needs to be renovated? What happens when something happens to the house? How is the VEG, so the association of owners, how is that structured? Is that in your favor? Is it not in your favor? There are a lot of details that we've learned over the last 8 years, and some of our advisors have 20 years of experience doing this. So we've helped over 10,000 people with their home, and those are a lot of learnings, and we try to help them avoid these kinds of mistakes and as well pitfalls. And that's also where the name comes from. We are the friend for the customer during their home buying journey.
Well, it definitely looks user-friendly. Let me clarify for our viewers. So you're saying that the typical mortgage broker may be incentivized by some banks. Let's say they work only with banks B and C and don't work with A because B and C pay better commissions. But the mortgage consultants inside Hypofriend, they have like a salary, so they
Exactly.
can choose bank A just because it's the best offer, right?
They don't win anything. They don't gain anything if they choose bank A or B. So we're generally we don't focus on that. So it's our commissions are almost always 1%. So it's a standard fee that we charge the bank. So it's programmed into our platform, and our, let's say, North Star, what we care about is happy homeowners. So we focus on how many people can we help. And so far we've helped 10,000 and we hope to keep increasing that. And when we look at a bigger picture, we actually look at how many people make smart financial decisions. So that's not just the home, but that's also an investment property or a ETF private pension plan. So those are kind of the three pillars that we have. In Germany, it's quite complex because of the tax system. It's not so straightforward. Real estate is a great way, on the one hand, for homeowners because they can sell the property tax-free if they live there after 2 years. If they are renting it out, they can sell it tax-free after 10 years. And they can deduct the interest from the loan from their taxes. And they can also deduct the depreciation of the building, which is about 2%, from their rental income as well. So they're not paying any tax on their income. They're actually getting taxes back. So that's something that's very interesting, especially for high earners these days.
Yeah, and I've seen on your other website, you have real estate properties. They have additional tax advantages because of
Exactly.
energy
Yeah.
efficiency. So dear viewers, if you are interested in having live about investment properties in Germany for renting with these tax incentives, please write in comments one, and if we have a lot of ones, we will do it as a live. Okay, Nick, I think we pretty much sorted the process on the Hypofriend and why it's better than the traditional paper way of doing things. You do have a lot of very useful articles on the website.
Mm-hmm.
We will need hours to go through them.
Yeah.
But the one I particularly liked was about the mistakes. Trying to find it, but basically it was like 5
pitfalls.
typical mistakes when buying property in Germany. Maybe you can comment on that and try to tell it in a few minutes. What's the most important? What's the mistakes to avoid?
Yeah, so I think Germany, it's different than, let's say, the US or other countries because of these high upfront costs. And because of these high upfront costs and the inflexibility around it, the typical German buyer buys their house once, lives there till retirement, which is an old phenomenon that made a lot of sense at the time. So they would save their money, then they would buy the house or even build the house. First buy the land, build the house, live there till retirement, give the house to their kids, tax-free. So that's the classic German approach. They wouldn't kind of buy an apartment in the city to live in. That doesn't make a lot of sense. But now, because property prices have increased so much, they're basically experiencing what the rest of the world had already experienced in the 2000s, where, wait a second, I can't afford my dream house at 30. I need to think smaller. And I need to get on something called the property ladder. And this is a very common term in virtually every other country except for Germany. Why? Because in Germany in the 2000s, they actually didn't have much of this crazy property increase that the rest of the world did. In 2008, there was no crash in Germany. It was just like, it was already kind of flat. And only from 2010 did it increase. So what you see in Germany is they're very late to the game. And what that means is that the whole market has appreciated massively in the last 10 years, especially from 2012 to 2022. And what we see in the market as mistakes are people who wait too long. So they wait too long with saving up for equity because they want to afford that dream house. The problem is it's really difficult to outsave the market. So let's say you have your income, you earn 50K, then the next year you earn 54, 58, 62, 70 after 4 years. You've increased by 20K. The problem is your affordability cannot keep up with the speed at which the market has been increasing. Even if it's 3%, the problem is 3% of a 400K property is more, that's 12K per year. So you can't earn those 12K in 1 year, typically. So that's kind of the effect of this compounding. So what do you have to do then? In this case, instead of trying to afford the 400, you start with the 200, because the 3% on the 200 is 6, and that might be manageable. So if you start already early with a smaller property, like the rest of the world has already figured out, you actually are able to, at a certain point, buy that dream house by buying that apartment. That apartment you may sell after 10 years, tax-free, and then all of a sudden you have 100K, 150K equity that you then use to build, to buy the house. And this is a very non-German way of thinking about it, but that's also what made Hypofriend quite popular because of the financial education. And the Germans, they don't really think this way because they're like, okay, I can't buy my house. I need to move out further. Yeah, so it used to be that I could buy a plot of land 30 minutes from Berlin and build there. Now I have to move to the middle of nowhere, 1.5 hours, and then I do this building, construction, and the German dream. And that German dream just doesn't make sense to a lot of expats who, for example, maybe they want to live in the city for 5 to 10 years. They don't exactly know. But our approach is much more flexible. You buy the property, you live there for as long as you can. At the point that you need to move out because your family is too big or you leave the country, you continue renting it out. You continue renting it out to the 10-year mark, and then at the 10-year mark, you can always refinance it or sell it, or use the equity inside of it to buy a bigger flat. So those are kind of the life planning discussions that a lot of people don't think of, especially in Germany, and especially when they talk to German mortgage brokers, because German mortgage brokers, they're only focused on getting you this mortgage so that they get paid. Whereas we will say, honestly, you should probably not try to buy this this big property or this small property because it doesn't make sense in this overall constellation. And I think that's the biggest mistake.
Yeah, that's the great point. So to summarize, don't wait too long and analyze your whole big financial picture. For our viewers, first reminding you about likes, you do have ability to ask questions now. Please write them in comments. We will gladly answer. Also, I would like to announce this is the first live about Germany and investments, real estate in Germany, but we're gonna have a launch. We're gonna launch a course for Ukrainians. It's coming in a few months. Hopefully we can collaborate with Nick and his team on a lot of issues. And of course, we're going to tell about financial life plan, ETFs, taxes, and everything else specifically for Ukrainians in Germany. So there is a pre-sign up form in the description to this video. Nick, maybe one last question for me. In a lot of European countries, the property prices went just over the roof. Some people say they're insane now. That wasn't the case for Germany within the last 3 or 4 years. From what I've seen, the prices even declined a little bit. And once the prices start declining, some people say, oh, they're going to decline more and I'll buy them 20% cheaper, which is usually never happens, but once in a century, I guess, there is a really huge crisis. So what's your expectation now for the, let's say, German market is very different. Let's talk about Berlin market, because most of the expats and a lot of IT guys from Ukraine there. Is it stable now? Is it going to grow 3%, more than 3%? What's your team's expectation for the next year?
So we generally look at the house price index. It's a index created by one of the big platforms in the background, where we also get all of our mortgage data from one of the platforms. And what you see is we're basically back at this trend, this 3% trend. And what you're referring to is this is actually this Russian war, which reset the interest rates in a way. So interest rates used to be 1%, but then they flew up to 4%. And that effect alone means that the demand for properties almost like crashed overnight. I wouldn't say overnight. It was, of course, over the period of 3 to 6 months. But what we saw was a reset. Real estate is extremely slow and sticky. So it's not like Bitcoin or ETFs even, where you have volatility of 50% sometimes. Real estate, you have maximum volatility of 10, 15% per year. And we saw that. But the reason we saw that was because we've never seen an interest rate spike from 1% to 4%, because we never had interest rates so low. 4% is rather normal if you look at the long-term history of interest rates, actually even rather low. They used to be 8%. In 2000, they were 6%. You can look at our website. We have longer-term data for that as well. And what I'm trying to say with this is we've never seen such a spike. And despite that spike, we only saw a decrease of about 15% in most areas. So despite the interest rate going up 4x, from 1% to 4%, we only saw prices decrease by 15%. And there are some fundamental issues which support why the prices didn't drop further. The first is there's a fundamental shortage of properties. What you see is a mismatch in supply and demand. When you go back 100 years and you study cities like Amsterdam, Paris, you see the urbanization effect. So the center, then they build around the outskirts and around, and everyone from the towns want to move to the cities because there are better jobs, there's better social systems, infrastructure, etc. Humans are human by nature. And what we see is the houses in the outskirts, and I'm not even talking outskirts, houses like far out in very small C, we call them C-tier towns, the prices really dropped. They really dropped 20%. And if you then had houses that were poor energy efficiency level, so in Germany you have the rating from A to H, A being the best, A++ being the best, and H being the worst. If you had an E or an F or H property, you saw price drops of 25%. Why? Because people were discounting this by the investment that they have to invest in the property to get it up to a B or C. And what I'm trying to say here is that the dip or decrease was not even. And the apartments, and here's what I want to say, is this graph is actually only looking at apartments because most of our buyers buy apartments in cities. And we did see a 15% drop, but in the top 7 cities, we see a quick recovery. Why? Because this is where we have a shortage of properties. Recent study came out last week, which showed that Germany has a shortage of 1.4 million properties. Also because of the influx of a lot of immigrants, Ukrainians, for example, lots of increased demand, especially in the cities. And we simply don't have enough properties. And so what you see is there are too many people and too few homes. And even if the interest rate is 4%, it will make sense for a certain amount of certain amount of renters to buy instead. Especially if you come in later and you have a very high rental contract, it can make sense to buy. So you see a shift from renters to buyers, and that's why we see this uptick again. And we expect, unless there's a building boom, that prices will continue increasing at 3%, which is the long-term trend, by the way, in Germany. So inflation is 2% and then 1% real appreciation.
Yeah, well, I would say it's normal. And in many countries before the 21st century, it was this way, inflation plus a little bit.
Yeah.
And then it accelerated in the last 20 years, I'd say.
Yeah, the low interest rates, they pushed all asset prices up. So, and that's what we see in Germany as well. And yeah, I expect prices to continue increasing in 26 and beyond.
Yeah. Well, my image of Germany is that it doesn't move fast enough. So you have this influx of immigrants, a lot of them getting jobs, having savings, they want to buy, and then you don't have enough builders because
Exactly.
it's so regulated, and the permit will take years. I just visited real estate seminar, and they were speaking about other country, and they said, "Oh, we buy lands from churches, and we build at them, and it's easier in terms of permits, etc." But yeah, generally the supply and demand, and when supply is kind of depressed by regulation, that might be the point. Anyway, I don't see any questions. So for all our viewers, just to sum up, that we've talked about Hypofriend, who helps to get the right mortgage and who does it in a very digital and transparent way. There is another website that helps to invest in properties in Germany. If you want to have YouTube live about that, please write one in comments. And if you're interested in our course for Ukrainians in Germany about financial life, investments, properties, please sign up. The pre-registration form is in the description to this video. Nick, thank you for your time, and I hope to see you again on our channel, to be honest.
Yeah, sounds good. Thank you so much for your time. And if there are any questions, you can write us here in the comments or find me on LinkedIn under Nick Mulder, and we can discuss real estate.